What if America's largest retailer can no longer afford to be American? For decades, Walmart stood as a symbol of everyday low prices, steady jobs, and economic stability. But now that foundation is cracking. Tariffs meant to protect the economy are quietly driving it to the edge, raising food prices, closing distribution centers, and putting tens of thousands of jobs at risk. It's not just about politics or policies anymore. It's about the families watching their grocery bills double, the workers losing their livelihoods, and the silent disappearance of a system we all once trusted. Something deeper is unraveling, and fast. Number one, Walmart versus Trump's tariff storm. When President Trump publicly urged Walmart to eat the cost of the new tariffs, the statement might have sounded tough, but for Walmart, it was a warning shot. The world's largest retailer, already operating on razor-thin margins, was suddenly expected to absorb billions in increased import costs. Within days, Walmart pushed back, not with politics, but with prices. Shoppers across the country began noticing something different. Everyday goods, once staples, were becoming more expensive overnight. This wasn't just a corporate decision, it was survival. The tariffs, introduced under the Liberation Day tax package, were meant to boost American industry by slapping steep import taxes on goods from China, Europe, and beyond. But in practice, they did something very different. Shipping costs exploded. Container prices from Asia to the U.S. surged from $3,500 to over $6,000. That cost didn't stay at the port. It landed right on the shelves. A family-sized box of cereal? Up. Fresh produce? Up. Meat? Way up. Beef that once cost $9 a tray was suddenly hitting $14. And for families already struggling to stretch their paychecks, that shift wasn't just noticeable, it was devastating. Here's the bitter twist. Protectionist policies, sold as a way to defend the American worker, were now punishing American consumers. The same people who voted for change, who hoped to see made in USA products fill the aisles again, were now wondering why their grocery bills had doubled. Walmart, a company that built its empire on affordability, found itself unable to protect the very value it promised: low prices. The iconic slogan, "Everyday low prices," quietly disappeared from shelves, a silent admission that even Walmart couldn't shield its customers anymore. Number two, a silent collapse begins. Walmart didn't hold a press conference. There were no headlines, no official statements, but something disappeared. Something that had been there for over 30 years. The phrase "everyday low prices," once printed on signs, receipts, and banners across thousands of stores, was suddenly gone, quietly removed. No explanation, no warning, just silence. And that silence spoke volumes. Behind the scenes, the impact of the tariffs was becoming impossible to contain. Walmart announced it would scale back domestic operations, starting with the closure of 10 major distribution centers from California to Florida. Each of these centers employed more than 1,000 full-time staff and nearly 1,500 seasonal workers. The total number of workers affected? Over 50,000, and worse, most were on short-term contracts or worked through temp agencies, meaning they had no safety net, no severance, no help. Almost instantly, the internet began to fill with footage. TikToks under the hashtag empty aisles showed abandoned shelves, dark warehouse windows, and logistics signs marked temporarily closed. In Groveport, Ohio, a man sat behind the wheel of a truck he had driven for 17 years. He wasn't angry, just lost. "I delivered through storms, holidays, whatever they needed. Now I've got one undelivered package and a house about to be taken by the bank." This wasn't just a company adjusting its budget. It was a system quietly unraveling. One truck, one store, one paycheck at a time. In Brooksville, Florida, a city where Walmart's distribution center made up nearly 9% of the local budget, council members scrambled into emergency meetings. One call from Walmart had triggered a ripple effect. Uniform suppliers, local diners, and satellite logistics firms were all suddenly in jeopardy. Walmart had long been the invisible engine behind America's everyday economy. Now that engine was stalling, and no one seemed ready. Number three, Project Triage, Walmart's leaked emergency plan. The public saw price hikes and store closures, But what they didn't see until it leaked was a chilling internal memo. Titled Project Triage, the document laid bare Walmart's emergency response to a crisis no longer manageable. Quietly circulated from its Bentonville, Arkansas headquarters, the plan confirmed what employees had feared. 10 critical distribution centers across the country would shut down operations for 6 weeks. The move, while labeled temporary, came with no guarantees. Nearly 50,000 workers were directly impacted. And here's the devastating part. Over 70% of them were on short-term contracts or employed through temp agencies. That meant no benefits, no severance, no fallback. For these workers, it wasn't just a layoff, it was a full stop. Entire local economies felt the tremors. In towns like Brooksville, Florida, and Groveport, Ohio, Walmart's presence wasn't just retail, it was infrastructure. Real estate taxes, income tax revenue, satellite vendors, truck routes, Walmart fed it all. And with one corporate decision, that entire flow was disrupted. City councils scrambled into emergency meetings. In Brooksville, where Walmart's DC 630 accounted for nearly 9% of the city's budget, more than 200 local business owners showed up in panic. Logistics companies, uniform providers, even small diners that relied on drivers' lunch breaks, all were suddenly in the red. One council member said it bluntly, "When Walmart stops shipping, the whole town starts sinking." This wasn't just about a corporation tightening its belt. It was a reminder of how deeply tied Walmart is to America's middle class and how fragile that relationship really is. When a single company's shift in logistics can send an entire city into chaos, it raises a chilling question. Number 4. The tariff earthquake spreads globally. It all began with a signature. Executive Order 14.257, touted as the Liberation Day tariff package, was meant to shift the global balance, making America less dependent on foreign goods. But instead of creating stability, it unleashed an economic earthquake that shook the world. Within just 4 days, retaliatory tariffs came crashing in. China responded first, followed quickly by the European Union, South Korea, and Japan. The targets? Everything from cars and electronics to basic consumer goods. It wasn't just a trade dispute, it was a full-blown trade war. And Walmart, sitting at the center of the global supply chain, felt the hit instantly. Shipping costs from Asia to the U.S. skyrocketed, jumping from $3,500 to over $6,500 per container in just 3 weeks. Industry analysts warned it would likely surpass $8,500 by mid-July. That kind of jump isn't just a number, it's a tsunami. Delays spread across every port, containers stacked up, delivery timelines stretched by 2 weeks or more. The gears of global trade began to grind slowly, and then, in some places, stopped entirely. In Shenzhen, China, the Hunar toy factory, a 40-year supplier to Walmart, slashed its output by 70%. In just 3 weeks, over 130 workers were laid off. Their crime? Manufacturing for a client that could no longer afford to place orders. A union rep described it like this: "Each container now feels like a cost bomb, waiting to explode." And it wasn't just Asia. Europe's markets wobbled. In just 3 trading sessions, $80 billion was wiped from the EU's stock market. U.S. food prices climbed by the hour. Global supply chains, once fine-tuned for speed and efficiency, now operated with uncertainty, delays, and fear. Number 5. Walmart's global retreat and Project Reset. Faced with mounting losses and a global supply chain in chaos, Walmart launched Project Reset, a sweeping, high-stakes overhaul of its sourcing strategy. The first move, a strategic retreat from China. In just 1 fiscal quarter, Walmart slashed its imports from Chinese suppliers, dropping from 60% to 48%. Major contracts in Guangdong and Xiamen were abruptly terminated. It was a dramatic pivot, one meant to reduce exposure to 145% tariffs, but it came with consequences. To fill the gap, Walmart scrambled to sign new deals across Southeast Asia. Factories in Vietnam, India, and Cambodia suddenly found themselves flooded with urgent orders. In Hanoi alone, Walmart committed $1.2 billion to build new facilities for textiles and household goods. On one condition, reduced tariffs capped at 25%. But just weeks later, the U.S. government dropped another bombshell, a potential 46% anti-dumping tariff on Vietnamese imports. Overnight, contracts were canceled, deals undone, and production lines put on hold. It was economic whiplash. Walmart was chasing stability in a world that refused to stay still. With foreign markets growing riskier by the day, Walmart made the boldest move yet, bringing production back home. The company issued $5 billion in bonds to fund construction of three massive manufacturing facilities in Arkansas, Ohio, and South Carolina. The goal? Slash shipping times from 28 days to under 7 and insulate its operations from foreign policy shocks. It sounded like a solid plan on paper. But rebuilding a global supply network that took 30 years to perfect isn't something solved with a groundbreaking ceremony. Training workers, sourcing raw materials, building new vendor relationships, all while maintaining store shelves, posed a logistical nightmare. And beneath it all was a much bigger question. Could Walmart actually afford to be American again? Number 6, the AI gamble. Walmart's 520 lifeline. Desperate to regain control in an uncontrollable environment, Walmart made a move that shocked the industry, a $520 million investment into artificial intelligence. The company partnered with automation firm Symbotic to create Link 16, an AI-driven logistics system modeled after military-grade data networks. Its mission was ambitious: scan global trade routes, analyze tax policy changes, track climate disruptions, and reroute inventory, all in real time. Link 16 wasn't just a logistics tool, it was Walmart's lifeline. With this AI system, the company hoped to stay ahead of the chaos by predicting tariff impacts before they hit, rerouting containers before penalties were triggered, and optimizing warehouse inventory down to the hour. Analysts projected that if fully implemented, Link 16 could save Walmart over $600 million per year, potentially even opening the door to licensing the technology to smaller retail chains, creating an entirely new revenue stream. But there was one major flaw. AI thrives on patterns, and Washington had none. Every time the White House hinted at a policy shift, whether in a press briefing or a single tweet, Walmart's entire system had to pivot. Contracts were rewritten, shipments rebooked, inventory redirected. What was meant to bring order became another layer of high-speed adaptation. One insider described it like building a bullet train with no tracks. The AI was powerful, yes, but it couldn't replace the basic stability that used to define American trade policy. Walmart had the tools, the funds, and the vision. But the landscape beneath it kept shifting. Number 7, markets crash, trust erodes. While Walmart scrambled to reinvent itself, Wall Street made up its mind. In just 30 trading sessions following the announcement of the Liberation Day tariffs, Walmart's stock plunged 11%, wiping out nearly $37 billion in market value. Investors who once viewed Walmart as a symbol of retail resilience now saw a giant caught in a storm it couldn't control. The fallout didn't stop there. Retail ETFs, which rely heavily on companies like Walmart, were forced to reshuffle their portfolios. As Walmart stumbled, the shockwaves spread through the entire retail and logistics sector. Confidence eroded, volatility spiked. Even competitors weren't spared. Because if the biggest player in the game was buckling, who could possibly be safe? Small and mid-sized businesses, already strained by inflation and supply delays, were the first to fall behind. Unlike Walmart, they didn't have $520 million to spend on AI. They didn't have bonds to build new factories. They didn't have global teams to chase down backup suppliers. They had no safety net, only shrinking margins and rising costs. And the pain wasn't just on balance sheets. Consumers were now paying 20% more for the same groceries, essentials, and household goods. For families who once trusted Walmart to stretch their dollar, the change was personal. It meant skipping items, switching brands, or simply going without. The promise of Made in America was turning into a painful waiting game. A future full of factories and self-reliance might come someday, but the price to get there was being paid right now by workers, shoppers, and entire towns. Number 8, while the U.S. pulls back, Canada surges forward. As Walmart U.S. downsized, paused shipments, and scrambled to rebuild, something unexpected was happening just across the border. Walmart Canada was thriving. While American shelves emptied, Canadian supermarkets stayed stocked. Supply lines originally routed through California ports were redirected to Vancouver and Halifax. In less than 6 months, over 40 global shipping routes shifted north. Major international suppliers, once exclusive to Walmart US, began signing contracts with Canadian retailers like Loblaw and Metro. A factory owner in Bangladesh put it plainly, "We used to send 30,000 jackets a month to Walmart in the US. Now the entire order goes to Walmart Canada." And Canada wasn't alone. Mexico ramped up agricultural exports to Asia by 28%, while India secured a $6 billion deal to supply pharmaceuticals and consumer goods to the EU. These countries didn't just survive the shift in U.S. trade policy, they capitalized on it. Why? Because they stayed open. While the U.S. imposed tariffs, reshuffled contracts, and paused distribution, other nations presented stability. And in global trade, trust matters more than size. When business partners aren't sure if your tax rate will change next week or if your ports will still operate next month, they look elsewhere. For decades, the U.S. was the hub, the place where deals got made, goods got moved, and markets followed. But now, as one executive quietly said, the world is learning how to live without us. It's not just about losing contracts or seeing shelves go bare. It's about losing credibility, losing confidence. If this made you rethink what's really happening behind the prices on your receipt, drop a comment, not to complain, but to be part of the conversation. Check out our last video for more untold truths the headlines missed. We pour hours into every story we bring you. So if you found this valuable, support us with just one click. Hit that subscribe button.